Hello, everybody. Thank you for watching this show, Hospitality Daily. It is all about helping you stay informed and inspired each day by the most interesting people in hospitality. My name is Josiah Mackenize, and my goal is to help you reconnect with why you work in this industry and get fired up to go out there, delight others, and reach your goals. I'm joined today by Jake Wurzak, who is the founder and CEO of DoveHill Capital Management, where he's led the investment of more than $1.5 billion in hotel assets throughout the country since founding that company in 2011. He's also the president of Wurzak Hotel Group and the host of the Masters of Moments podcast. Jake, welcome to the show.
Thank you for having me. This is like my second time chatting with you, and I appreciate what you're doing for the industry and your passion for the industry as well.
So glad to have you back on the show. Maybe to kick us off, I want to hear from your perspective, why do you spend so much time educating people in the industry about investing, about hospitality? It feels like every single day, actually multiple times throughout the day, you're posting to social media, you're running a podcast, episodes are constantly coming out, you have an educational course. You spend so much time on this, and you're CEO, president of multiple companies. Why invest so much in education?
My view is great companies are a result of great teams and great players and the assembly of really good people that want to work on something together. And through that, I have an abundance mindset. I've always taken the approach with my peers, colleagues in business, that I'm going to share a little bit more, maybe too much in some instances. But my hope is that others will get value from that. And in return, I'll also get value. And on the off chance, like the very off chance that someone wants to screw me, well, I'm just not going to be friends with you anymore. And I'll just remember that. But one interaction with one person that's negative is not going to impact my life. But there are so many positive interactions that will interact my life. And in business and investing, I think about asymmetrical risk reward. The risk is so low of having a negative experience or interaction with someone, but the reward could be so high that for me, it makes a lot of sense. So getting out there and doing some educational stuff, some posts, is really great because it feels good, but it expands my network. And in real estate, relationships are everything. So in addition to helping others, it's also helping me because I'm growing my relationship, I'm growing my influence, I'm growing an audience that will potentially come back in the form of deals, investors, opportunities, friendships, and learning. Like, I started this podcast and I joke with people because I consume my own podcast. I've learned so much from the podcast by like talking to these really smart people and impacting my own companies that I'm sure it's helped other people, but it's mostly helped me.
I love that. We'll make sure to link to that in the show notes. And I think I want to talk a little bit about educating around investment specifically, because I didn't come from a background of this world. I really knew nothing about it. I ended up working for a company called Juniper Square, where I was working with investment managers across the country. One of those people was someone we both know, Chris Powers at Fort Capital. He has launched the Fort podcast, which you've been a guest on. I can also link to that in the notes. But as me and my team were working with him and his teams, kind of through the pandemic, I noticed he was really focusing on educating people on what investment management is, and it wasn't, I think as my outsider's view, I thought if you're talking about investment, it's about making a lot of money, but it's like, okay, here's the logistics, right? And it's been so exciting to see you do this in the world of hospitality, which I think is an incredible space, such that when it came time for me to, I've always wanted to become an investor. DoveHill was my first call. And so I'm really excited to kind of participate with you and in some of this, but I'm curious, what is, why help people on investment specifically? Why are you trying to educate people in this area of hospitality?
Well, let's take a step back. One of the coolest things about investing in hospitality is everyone could be an expert. And whether they're an expert or someone with knowledge, they have knowledge because they've been to a hotel, they've experienced a hotel. And what's unique about hotel investing is you can actually go inside of a hotel that you're considering investing in. You can spend the night there, see how it is, develop your own opinions, see where the opportunities are. And in other real estate asset classes, you can't like spend the night in an industrial building. Maybe you can drive through on the parking lot, but it's not that same experience. So I think hospitality is very unique from that standpoint. And I also think it combines the benefits of an operating business and a real estate business in one, which is why it's so appealing to a lot of investors. But it's very, very complicated. So part of the reason why I wanted to educate people is because it's so complicated. And it's just now starting to be much more institutionalized. But one of the things that excites me is actually bringing it not to private equity firms, because those guys know about it, but it's like direct to consumer, going right to my investors and cutting out those middleman allocators. We work with the biggest private equity firms out there, but I also raise capital from family offices and high net worth investors. And the more that we can educate people, the more opportunities I think we will find in our own business, and the more potential opportunities I can create for others. And I also think it's important to enlighten people where my experience might save them. And you see a lot of stuff on Twitter or on the internet where people with less experience than I have, or the people that I've learned have, and maybe I can share with them an insight that might help them. It might make the deal better. It might make them pass on a deal. And to me, that's really gratifying, because when I was coming up in my career, I had to really find those relationships. It wasn't like you can just go on Twitter or somewhere and find them. Now you have to be selective who you follow, but I had to really work hard and to get those relationships. And I think other people should get real life relationships too. And you can find those relationships online and learn from people online. But that is how I've learned the most in my career. It wasn't from, yeah, I didn't go to Cornell, where a lot of hotel people learn about hospitality, and it's a fabulous school. But the biggest impact has always been learning from my peers and people that I looked up to and respected. And not everyone always has access to people in those positions. And it's nice to be able to provide that if I can.
I'm going to link into in the show notes to some of our past conversations about this, because you talked at critical moments throughout your career of going to that peer group. So, things like the pandemic hits, right? This brand, it's a whole new world, whole new landscape. You're talking with other CEOs of how do we navigate this. So you worked really hard to build those relationships. You had that private discussion going, but then you decide to launch Masters of Moments, right? The podcast. And it's cool to see you not only kind of wanted to do that to educate people, but you're having fun learning as well. I'm curious, what was unique to the podcast in that format, where it sounds like you are very engaged, and I kind of hear this as a listener. What have you learned or surprised you doing the podcast specifically?
How amazing so many people actually are, and how impressive people in my network are, or related to my network. Like how impressive the people are that I can get access to, whether it's directly or indirectly through one other person. And it is amazing, regardless of the business, regardless of the focus area, how many high quality people are out there, and the different ways that they've found success and the different ways that they run their business. But a lot of it all comes back to similar themes. So while there's a lot of diversity in terms of the guests and the people and their backgrounds, there's a lot of consistent themes that you'll also find in some really important business books. And that's another funny thing. A lot of the same books keep coming up over and over again. Like Vern Harnish, Scaling Up, is one of them that's been very impactful to me. Traction is another one that's also been very impactful to me. And those books kind of have come up multiple times on the podcast. And another reason why I like doing the podcast is also because I just get to ask people the real questions that if you were an entrepreneur, if you were a principal in this business, you would want to ask if there was, total unfiltered scenario and you could just ask anything. And I put myself in that position where I could just ask whatever question, and 9 times out of 10, they answer it. It's great.
Well, I'll link to the podcast. Really encourage people, head over there. If you're listening to this, open up your podcast player, search for Masters of Moments, subscribe. There's such a back library of great conversations. I feel like you're always coming out with fresh ones. It's really exciting to see. I wonder if we could talk a little bit about kind of what's exciting you in what's exciting for you in the world of hotel investment, hospitality investment right now. Kind of this landscape is always changing. But what are you thinking about? Kind of what are you looking into these days?
Josiah, there's not a lot of interesting things out there, which is kind of interesting. And that, I think, means that this point in time could be the best time to invest. When a lot of private equity firms are sitting on the sidelines, everyone's looking around, all these big fancy investors are looking around, waiting for someone to go. Well, there is an opportunity for firms like mine to be a first mover in certain very specific categories that we have a lot of expertise and skill in. Then eventually others will follow in. But being so close to the hotel operations side, we have vertically integrated management company, knowing certain markets really well gives us a competitive advantage to layer on our value add skill set. The other interesting thing, I think we're at a moment in time where kind of rates are high, and we figured out some pretty innovative approaches to get equity-like returns in kind of a credit debt-like instrument. And simply put, that's preferred equity, or you could call it structured equity. During COVID, we did about 9 or 10 transactions in structured equity, and the fund that those are in is performing really well right now because we knew how to make the bets. We could move quickly. We knew how to structure them in a way that not many people were doing. We thought about it differently, but we also were able to make the proposals and get the deals done because of who we were, the relationships that we had, and what we knew about the business. A lot of people who would structure the deals in the way that we were structuring them might be like a hedge fund or a guy sitting in an office in New York just banging out an Excel spreadsheet, but doesn't have the practical knowledge that we have. And because we have that knowledge, we knew how to negotiate the deals in a fair way to actually get the deals done. And there are opportunities like that today. So I would say the one silo is structured equity and preferred equity. They're basically the same thing.
Before you go further, Jake, I wonder
Yeah.
for those brand new to that space, like myself, how would you define this in kind of the simplest terms? What is this approach?
I'm going to do a podcast episode where I kind of break down some of our secrets, which, it goes back to the whole thing. Like, I'm not really worried about the secrets because I don't think it's a zero sum game and we're really good at it. So if other people are doing it, fine, but whatever. So very simply, what preferred equity is, if you think of a typical real estate transaction, you have debt and equity. And in that most basic transaction, debt gets paid first at typically some sort of a fixed rate or a floating rate that's very calculable, and then equity gets paid second. Preferred equity slots right in between, like a hamburger, in between debt and equity. So once the debt is paid, then the preferred equity gets paid, then the common equity gets paid. The sweet spot and how to execute on these deals to create the equity-like returns in a preferred equity position is all in the negotiation. It's all in the structure. So what we do often is we structure these deals so that we don't have current pay. So we're not like a mezz lender requiring payment and praying that the common equity gives back the keys. We actually want the common equity to be successful, and maybe we'll have a back end kicker. But why preferred equity works so well is after a certain point, the preferred equity either stops or gets diluted. So the common equity, if the deal's successful, can actually get a greater return with preferred equity than without preferred equity being in the deal, which is why it's so unique and why we're able to be so successful. The other thing is, right now, when lenders are requiring pay downs to debt, how do you pay that money down? Well, you can pay it down with preferred equity. And that's the like Goldilocks situation, because I'm now using preferred equity to pay down leverage. So my basis is lower, but somehow I'm still earning equity-like returns before the rest of the common equity that's behind me. So we're going to be raising a new fund, and that's going to be one of the key strategies in the fund, like it was in our first fund.
I love it. Thanks for that explanation. And so that's kind of one of the core areas that you are looking at, have done a whole string of deals with. You said there's also another area that you're looking at.
Yeah, and that would, I guess, break into highly differentiated assets in markets that we know, where we can create value with our skills on the management side, on the deal structuring side, and also on the purchase side. But these are assets that are experiential in nature, that maybe there's something special about the building. They are unique. They are non-commoditized hospitality projects, because where we get energy as a company is focusing an immense amount of time on assets where it's worth our while, and we get a lot of gratitude doing it. I always say, if you're going to be in the hotel business, you better like the hotels that you own, because if they're just random commoditized hotels anywhere in the USA, maybe you should be in the multifamily business, because if you're going to go through the pain and suffering, at least have it be on an asset where you can reap the rewards of those painful moments, and you can use your mind to think of ways to add value and outcompete your competition in more ways than you could in other asset classes. So that second category is really highly differentiated hospitality assets with a focus on experiential hospitality, boutique hospitality with a strong leisure focus in great markets that are high barrier to entry. Every market probably today is going to have like limited supply, except maybe, Nashville, Austin, and diversity of demand. We want heavy leisure, but we want diversity of demand. So a little bit of corporate, a little bit of business, a little bit of fun weekend stuff, and then obviously the leisure business. So that is really the two categories. And then there's maybe a third category where, because we're in these certain markets, we are going to see opportunities that others won't. They're going to be great deals, and we have the opportunity to enhance them. But they might not be the coolest, hippest, motel or boutique hotel. They might be a DoubleTree or a Sheraton, or we just closed a Hilton Homewood deal. Why did we do that deal? Because I bought it cheaper than anyone else could buy it, and we bought it at a point in the cycle where it was really at the bottom, and we are coming into a recovery period. So we're going to see a couple of those in markets that we know really well.
I wonder if you could speak a little bit to the advantages of being vertically integrated. Not only are you running DoveHill, but you're also the president of Wurzak Hotel Group, and you have an incredible team of people there. If I think about people like James Ferguson, who's been on the show a number of times, if I think about culture in hospitality, I think about James, right? Every time I open LinkedIn, there's another video of him engaging the teams. You feel the energy even from a distance, even through social. But I guess like on a kind of a high level, what are some of these advantages that this gives you as an investor in that you're managing your hotels?
Well, that's just it. We can differentiate ourselves and be closer to the asset than any other investor, because we actually manage the asset. So for some part of the business, we create like a little Chinese wall. So there's a slight division between the investment side and the management side. In other areas, there's no division, and we can get our hands dirty, and we have access to information, and we know what's going on. James Ferguson's a great example. So he works in our people department, our people and culture department. Kelly leads that department, and they have done incredible things over the past year. 4 or 5 years ago, I had a meeting with James today. There's a big team meeting. 4 or 5 years ago, we looked like a completely different company. 2 years ago, we looked like a completely different company. And what's changed over the past 2 years or so is culture, and leaning into that culture, because it is hard to hire people. It's hard to find people. And we are building a differentiated management company that really focuses on people, that places an emphasis on culture, because at the end of the day, how you win in hospitality is with service and exceeding guest expectations, because they keep wanting to come back to your hotel. People have to be happy about working in their hotel. And these are the kind of insights, and this is the kind of impact we can have with both an investment company and a management company. There's no filter in the data coming back. I have access to, obviously, both sides of the data, because I'm the CEO of both companies. We have a president of the management company, Eric Davies, and my head of investments, Charles. He is not on the management side, but can get access to anything immediately. And it also allows us to collaborate in ways that you couldn't if you had a management company reporting to an investor. For example, we had our monthly team meeting this morning, and everyone was in a room, our investment team and our management team, reviewing the numbers, giving ideas, being open about the challenges, providing solutions. James came up with an amazing idea about an issue we were having with guest service scores. Then Ross on our revenue team chimed in. Ben, who is a VP of operations, been with us for over 20 years, kind of brought it all together. And now we're going to take a team of 3 of those people with the influence of our investment team to then go come up with a plan to standardize how we're looking at guest service scores on a monthly basis and the actions we're taking to ensure that if there's a problem at one hotel, we know what the problem is and we're fixing it. And then also to get in front of problems before they happen by gamifying certain service scores and other things. So I'm really excited about where the team is today. And we had a team meeting, as I mentioned today, and if you look at the same team meeting that we might have had a year ago, it's almost 180-degree transition. That's because we're firing on all cylinders from the culture side, from the operation side, and from the data side. Certainly, we might have different performance at different hotels. Some might be up, some might be down, some might be flat. But from a company standpoint, we know where the issues are. We know where the opportunities are because we have this great collaboration that's enhanced by data, technology, and a lot of confetti with James.
Gotta love that confetti. Well, but this is where the magic happens, right? I think it's the cross-functional leaders working together. But I think this is what's especially compelling to me about what you're doing is both the investment side and the operating side working together, because you can't realize full potential without these two elements of a hospitality business in concert. So that's awesome to see. I guess as you,
I can de-risk an
yeah,
investment because I have insights into the operation side. So we might know certain deals that we want to get into. We might know certain deals that we want to stay away from. And that gives us a competitive advantage. It also gives us a competitive advantage when we talk about our investment company. You know, Josiah, you invested with us, right? Like, why would you invest with us? You just shared that a reason partly was because we operated our hotels. By the way, maybe we're not the best operator, okay? Maybe we're only 8 out of 10 on an operator scale. I don't know. Maybe we're 9 out of 10. But the fact that we control it gives us an advantage over an 11 out of 10 operator because of the symbiotic nature of both companies. Now, it's been hard to get there. We weren't always like firing on all cylinders. You have to work at it. But when you get it, and we're definitely there right now, it's going to create opportunities. It's going to enhance our current hotels and definitely distinguish us from other groups that just do maybe one or the other.
as you look to the year ahead, you touched on a lot of things that are exciting in the world of investment, the world of hospitality. Is there anything else kind of you're especially excited about or things on your mind as we look to the year ahead?
I'm excited about a lot of things clicking. The hotel industry, believe it or not, there's certain markets that just boomed after COVID, right? They're well above 2019. Rates across the board in our portfolio are all higher than they were in 2019. But occupancy, depending on the market, is not always higher than it was in 2019. And we're now starting to see portfolio wide just consistent momentum. Whereas last year and the year prior, ups and downs, then you had challenges with cash flow, you had challenges with lenders, you had refinancings. I'm excited to focus on profitability, cash flow distributions across our great portfolio. And then I'm also excited to raise a new fund and do some more transactions in an area where I believe there's going to be tremendous opportunities given where debt markets are today, given where we are with renovation cycles and hold periods and those sorts of things.